Good morning. Before we begin with cost audit, understand the history behind cost audit. In India, the cost audit was introduced by Britishers. Okay, Britishers introduced cost audit not to have a control over the cost or whatever. Okay, to check the cost and to have a spy over the cost of production, how much they spend, etc. and all. And depending upon the cost of production, they used to charge the tax. Okay, so that we are not competing with East India Company. For example, East India Company, what they used to do is they used to get the raw material from India, take the raw material to their own country, produce it there, then bring it here and sell it. They used to sell it at a price which is lesser than the price which is available in the markets. So because their machine-made production was there, machine-made production was there. But India, it was a labor production, okay, manual labor production. The cost of production was more. So what happened is they introduced cost audit. They said for certain manufacturing companies, cost audit is mandatory. Okay. Why? Because they want to check over the cost, how they manufacture, how they spend and all. Depending upon that, they used to levy various types of taxes so that the cost of production, becomes equal to the selling price of the products which are sold by East India Company, like that. That's the origin of cost audit. But if you look at it in a true sense, cost audit is done by Indian government also now. Okay, number one, to check the cost of production, to check what is the price fixed by the industries. Okay, to ensure that they are not charging abnormal profit. They are not charging abnormal profit. In certain cases, we can see cost of production is only 2 rupees, but selling price may be like 20 rupees, 30 rupees because they are the monopoly. Okay, to control all these activities, central government, our Indian government also made the cost audit mandatory for certain companies, not for everyone, but certain regulated and non-regulated industries. The cost audit became mandatory. Okay, so that is number one. And if you, these are all regulation point of view, from government point of view, external point of view, internal point of view. Okay, that is from the management angle or from the control point of view, or for the benefit of the business, cost audit is required because the company should know where they are spending, how they are spending, and where they are spending more, where they are spending less. To have a better cost control, cost audit is definitely required. Cost audit is definitely required. Simple. We are afraid of China, not because of Corona. Okay, not only because of Corona, but also because of the products they deal in. Okay, wherever they entered a market, they were able to dominate the market because of the cost factor. Okay, they had an effective control over the cost. But whereas Indians, we are not able to have that much of control over the cost. So globally, we are not having the competitive advantage in selling the products as compared to China. So, but through an effective cost control, through an effective cost audit, cost control can be established. Okay, in the longer run, when the cost control is there, automatically orders will come to the country where the production cost is low, where wastage of resources are less, where productivity of labor is very high, where utilization of resources are very high. Automatically the production facilities are going to shift. So now if you look at from the manufacturer's point of view or from the entity's point of view, cost audit is beneficial. Okay, to have a control over the cost, to check the cost, to check where you are spending more, where you are spending less. Okay, cost audit is required. So that is about the introduction to cost audit or whatever. But now coming to the cost audit, whether the cost audit is mandatory for all. For example, for Bharadwaj Institute, whether the cost audit is mandatory. No, financial audit is mandatory, but cost audit is not mandatory. Please understand, financial audit is different. It is done by a qualified chartered accountant. Okay, to check the financial records like vouchers, journal, ledger, trial balance, check the P&L account, check the balance sheet items, and certify whether the financial statement reveals true and fair view. That is financial audit. Cost audit is done by a qualified cost accountant who is holding certificate of practice. Who is holding what? Certificate of practice. Okay. Now, before we go for appointment of cost auditor, what is the procedure, all those things, let us understand. Okay, what the cost auditor is going to check? He is going to check costing records. He is going to check costing records. For example, raw material control records like stores ledger, bin card, all those things. Production control records. Okay, labor records like payroll. Okay, like timekeeping records, time booking, timekeeping records is going to check. Is going to check utilization of factory, like capacity utilization, all those things is going to check. Is going to check cost sheet prepared by the company. Okay, so there are so many costing records which have to be maintained by the company. Okay, so now in your syllabus, what is covered is number one. Okay, whether I have to maintain cost records, whether I have to maintain cost records. Go through this. This amendment was made in 1st April 2015. Okay, if you look at the cost audit is applicable only when your turnover is 35 crores or more. You have to maintain the cost records when your turnover is what? 35 crores or more. Applicability of cost audit, we will come to that later. Okay, whether you are a regulated industry or a non-regulated industry, listed or not, if your turnover crosses 35 crores or more, then you have to maintain cost records. We will see the list of such industries which are given in your cost records rules. Okay, this is applicable from 2014 onwards. You can check all these things: telecommunication services, okay, petroleum products, drugs manufacturers, fertilizers, sugar industries, machine and machine tool making. All these things you need not remember, but I am just telling you. For all these industries, okay, when the turnover crosses 35 crores, you have to maintain costing records. Turbojets, okay, arms and ammunitions, okay, propellant, radar apparatus, tanks. If you look at majority of the manufacturing will be covered: steel, road and other infrastructure maintenance facilities, rubber and allied products, railway and tramways, cement, ores, minerals, base metals. Okay, so inorganic chemicals, jute and jute products, edible oils. If you look at, so many industries are covered. Health services also. Okay, education services. Okay, cardiac stents. Okay, if you look at all the replacement of spare parts in your body. Okay, if you look at all these comes under regulated sector. But if the turnover crosses 35 crores, you have to maintain cost records. Cost audit, we will come to that later. What do you mean by cost records? There are about 20-24 costing records which have to be maintained, like cost sheet, production control register, raw material register, labor register, all those things you have to maintain. Okay. Then these are all the things which are coming under non-regulated sectors: coffee, tea, milk powder, okay, insecticides like pesticides manufacturers, plastics and polymers, tires and tubes, papers, textiles, glass, other machinery items, electricals and electronic machinery items. So this is CETA means this is coming under Central Excise Tariff Act heading. That is for levying indirect taxes. So all these industries are coming under non-regulated services. So let it be regulated services or non-regulated services. If you look at applicability of cost audit. Okay, applicability of cost audit, I will come to that later. First, applicability of cost records. When you have to maintain records, let it be a domestic company or foreign company, we had seen the detailed list under table: regulated services and what? Non-regulated services, whatever it is. It may be engaged in the production of goods or providing services when overall turnover crosses 35 crores or more in the last year, then you have to maintain the cost records. For example, for 2009-10 or 19-20, please make a note of it. Okay, if your overall production or overall sales turnover from all products and services crosses 35 crores or more, then you have to maintain cost records. Then when cost audit is applicable, first we should maintain the cost records. Then turnover from all products and services. If you are coming under regulated sector, we had seen the meaning of regulated sector. All these things comes under regulated sector: drugs, pharmaceuticals, fertilizers, machineries, all these things. For all these regulated sector, if the turnover from all the products and services, for example, I manufacture fertilizer, I manufacture cement, I manufacture chemicals, total turnover of my company is 50 crores or more. Okay, I am coming under regulated sector: cement, iron and steel production. Okay, maybe I manufacture certain orthopedics, etc. and all. I take the total turnover of all the four products. If the total turnover crosses 50 crores or more, then cost audit is applicable. This is a most important objective type question, fill in the blank question, or okay, it's one of the most important question for examination point of view. 50 crores or more. Then okay, let us assume Total turnover is not crossing 50 crores. Cement, iron and steel, various products. I deal in 10 products. Total turnover is not crossing 50 crores. But single product turnover, let us assume iron and steel turnover crossed 25 crores. Again, cost audit is applicable. So when cost audit is applicable, overall turnover crosses 50 crores. Individual product turnover crosses 25 crores. In the last year, then the cost audit will be applicable for the current year onwards. For non-regulated services, you take total product turnover. If it crosses 100 crores, then cost audit is applicable. Individual product turnover 35 crores or more, cost audit is applicable. Ask question: are you regulated sector? Yes. Are you dealing in more than one product? Yes. Then if the total turnover of all the product crosses 50 crores, then cost audit is applicable. Okay. Then number one. Number two, if individual product turnover crosses 25 crores, again then cost audit is applicable. Any one criteria is met, then the cost audit is applicable. It is not both the criteria should be met. Either this 50 crore criteria or 25 crores criteria is met, cost audit is applicable. This is for regulated sector. Non-regulated sector, total turnover when it crosses 100 crores, cost audit is applicable. Individual product turnover crosses 35 crores, cost audit is applicable. In certain cases, cost audit is not applicable for you. Okay, when cost audit is not applicable, number one, the company is having revenues from exports or foreign exchange. For example, your revenue is 500 crores, turnover is 500 crores. In that, 75% of revenue is from export sales. Then cost audit is not applicable. If you are running a 100% export oriented unit, cost audit is not applicable for you. A relaxation is given. For example, I manufacture product, sell in domestic market as well as abroad. My total turnover is 400 crores. In that, export turnover is 320 crores. It is more than 75%. Okay, if my revenue in foreign exchange is more than 75%, then cost audit is not applicable. Then, companies which are operating in special economic zones. What do you mean by special economic zones? In Chennai, we have got SIPCOT, MEPS, Madras Export Processing Zone. Okay, where if you are running that company, then whatever may be a turnover, cost audit is not applicable. Then, companies which is engaged in the generation of electricity for captive consumption. What do you mean by captive consumption? You generate electricity and you consume within the company. You are running an electricity company that will supply power for manufacturing products, which means it is not sold to outside customers or to a government or whatever. You are manufacturing or you are generating electricity for your own self-consumption, means whatever may be the value of electricity generated, cost audit is not applicable. So in three cases, cost audit is not applicable. Turnover from export sales should be at least 75% of total turnover. That is, you should have collected in foreign exchange. Okay. Second, when you are operating in special economic zones like SIPCOT, Madras Export Processing Zones, or like export processing zones, SEZ, special economic zones, then cost audit is not applicable. When you are generating electricity for your own consumption, again the cost audit is not applicable. Then let us go for applicability of cost audit. We will see. It is a full Rule 3 and Rule 4. Rule 3 is applicable. Rule 3 is maintenance of costing records. When you have to maintain costing records, overall turnover crosses 35 crores. Overall turnover crosses 35 crores. Rule 4 is about cost audit. Rule 4 is about cost audit. Application of cost audit. Okay. So number one, regulated sector, non-regulated sector. We had seen overall turnover during the preceding year crosses 50 crores. Okay. Then aggregate turnover of individual product crosses 25 crores. Then you have to do a cost audit. See, you are under regulated services sector. Okay, overall turnover crosses 50 crores or individual product turnover crosses 25 crores, then cost audit is applicable. Okay, if revenue from export sales in foreign exchange crosses 75% of total turnover, then you need not do cost audit, but you have to maintain costing records. If you are operating in special economic zones, again, cost audit is not applicable, but you have to maintain costing records if your turnover crosses 35 crores. Okay. Non-regulated sector, again, if your revenue from foreign exchange or in the form of foreign exchange crosses 75% of total revenue, then cost audit is not applicable, but you have to maintain costing records. If it is operated in special economic zones, then cost audit is not applicable, but you have to maintain costing records. When you have to maintain costing records? In all the cases when your turnover crosses 35 crores, you have to maintain the costing records. Okay. Non-regulated services. If overall turnover in the last year crosses 100 crores or individual product services turnover crosses 35 crores, then cost audit is applicable. Simple. Now, a regulated sector, 50 crores turnover total or 25 crores for individual products, then you have to maintain cost records and that should be audited. Non-regulated services, 100 crores or more, individual product 35 crores or more, cost audit is applicable. Okay, so that is what we have seen here. Okay, in these cases, you have to maintain costing records if your turnover crosses 35 crores, but you need not do cost audit. So a combined version of both the thing is this one. Please note this, applicability of cost audit. Regulated sector or non-regulated sector, I request you to pause the video and copy, otherwise you can access the material or you can go through the material, it will be available. Okay. Remuneration to the cost auditor. Remuneration to the cost auditor is fixed by audit committee. For example, companies where audit committee is mandatory, for all listed companies you should have an audit committee. If your paid up capital is more than 10 crore, you require an audit committee. If your turnover crosses 100 crores, public company turnover crosses 100 crores, you require an audit committee. When your borrowings, deposits and loans exceeds 50 crores, you require an audit committee. So where audit committee is required? For all listed companies, public companies which are having a paid up capital of 10 crores or more, or turnover 100 crores or more, or borrowings, deposits 50 crores or more, you have to have an audit committee. So audit committee will be appointed. As per the audit committee's recommendation, remuneration will be paid. Okay, if there is an audit committee, okay, board will appoint cost auditor based on the recommendation received from the audit committee, and remuneration will be fixed by audit committee, recommended by audit committee, and the board will, okay, specify that particular remuneration. Okay, where audit committee is not required. In certain companies, audit committees is not required. Okay, if your paid up capital is not more than 10 crores or turnover does not cross 100 crores, or you are a non-listed company having borrowings of less than 50 crores, then audit committee will not be there. Then board of directors will appoint the auditors, the cost auditors, and fix the remuneration This is about remuneration of cost auditor. Okay, hope you understood. So who can be appointed as a cost auditor? A cost accountant within the meaning of the Cost Accountants Act or Companies Act 2013 can be appointed, which means a cost accountant who holds what? Valid certificate of practice. Should be a qualified cost accountant with a certificate of practice, you can be appointed as a cost auditor. Okay. Same qualification and disqualification for a financial auditor is applicable to a cost auditor also. For example, if you are a full-time employee in a company, for the same company you cannot do cost audit work. I am an employee of a company, sir, I am having ISWA qualification, CMA qualification. Can I become a cost auditor? No. Clear? If you are holding securities having more than 1 lakh face value, you can go through all those things. Okay. If you are holding securities having face value of more than 1 lakh, you cannot become a cost auditor for the same company. Okay. If you are already doing cost audit for 20 more companies, then you cannot be appointed as a cost auditor for this company. Okay. Then, if you have given loan to the company or taken loan from the company exceeding 5 lakhs, then you are disqualified. You cannot be appointed as a cost auditor. Clear? You should not have borrowed money more than 5 lakhs. A relative of the key managerial personnel, like relative of directors. Relative means parents, sister, brother, son, daughter, wife, husband. Those people cannot be appointed as cost auditor. For example, your husband or wife is working as a production manager or a chief finance officer or a general manager of the company or a director of the company. Can you be appointed as a cost auditor? You cannot be appointed as a cost auditor for the company. Relatives cannot be appointed. Clear? A company cannot do cost audit for another company. A company, for example, Bharadwaj Institute Private Limited has very good number of cost accountants. Can a company in company's capacity take up cost audit work? No, we cannot. Okay, so a company cannot do cost audit for another company. These are the disqualifications. Clear? So qualification is only one line. A member holding certificate of practice. Disqualification, employee cannot become cost auditor. Okay, a person holding shares more than 1 lakh cannot become cost auditor. If you are holding shares in holding company, you cannot become a cost auditor for subsidiary company. If you have borrowed money or lent money to the company exceeding 5 lakhs, then you cannot become a cost auditor. The person given guarantee for loans also cannot become cost auditor for the company. And the person not of sound mind or certificate of practice is withheld, then you cannot become cost auditor of a company. Clear? When your cost audit ceiling limit exceeds 20, then you cannot become a cost auditor of a company. Clear? This is about qualification and disqualification of which one? Cost auditor. You can see. Loans borrowed exceeding 1 lakh. If there is any direct business relationship also, okay, we cannot become a cost auditor. We cannot become what? Cost auditor. Rotation is not applicable to cost auditor. Once in 5 years you have to rotate financial auditor, but not cost auditor. But not what? Cost auditor. Cost auditor need not be rotated. There is no such provision in Companies Act. Financial auditor, yes, you have to rotate. Then who appoints cost auditor? Board of directors will appoint cost auditor. Cost auditors are always appointed by board of directors. Board of directors are interested with appointment of cost auditor once it is applicable. Then in case of financial auditor, the auditor is appointed by shareholders. In AGM, the auditor is appointed by what? Shareholders. But cost auditor is appointed by board of directors. Okay, then to whom you have to submit the report? To the board of directors. Who is the appointing authority? Board of directors are the appointing authority. So to the board of directors, you should submit the report. Cost audit report should be submitted within 180 days of the conclusion of the financial year. For example, if last financial year ended on 31st March 2021 or 2020, okay, your time limit for submitting cost audit report is 180 days. That is, within 6 months you should complete the cost audit work and submit the report. To whom you will submit the report? To the board of directors. Okay, and whether you have the right to attend general body meeting like normal financial auditors and talk to shareholders? No, clear, no such rights. Okay, number one. Number two, whether cost audit report will be given to shareholders? No, it will be like leaking of information, so it will not be given to shareholders. Then to whom the cost audit report? Simple. The board of directors, after receiving the cost audit report, within 30 days you have to file it with central government. You have to file it with which one? Central government. Clear? Cost audit report first will be given by cost auditor to the board of directors. Board of directors will forward to the central government within what? 30 days of receipt of that particular cost audit report. Okay. The contents of cost audit report is specified by, there are a lot of rules and regulations in that. I do not want to go in depth through it because at your intermediate level, okay, this particular knowledge about appointment of cost auditor Okay, remuneration to cost auditor, applicability of cost records, maintenance of cost records, cost audit is sufficient. Okay, there are some cost audit standards like accounting standards. Ind AS, we have got cost audit standards. The auditor will do cost audit as per the cost audit standards. Okay, that I do not want to go in detail. It is only an introduction thing that is covered in your syllabus. Okay. Then next, coming to secretarial audit. Okay, secretarial, like cost audit is done by a qualified cost accountant. Secretarial audit, it is not that much tested in this particular paper, but still we should have a knowledge about it. They may ask MCQ based on this. Okay, so secretarial audit should be conducted by or done by a qualified company secretary holding certificate of practice. Cost audit is done by a cost accountant who is holding what? A certificate of practice, like that. Company secretary who is holding a certificate of practice must conduct a statutory, audit. That's why that we call it as what? Statutory. There is secretarial audit. Okay, where secretarial audit is applicable? Number one, for all listed companies, secretarial audit is mandatory. For all listed companies, secretarial audit is mandatory. For the others, if your company is having a paid up capital of 50 crores or more, or turnover of 250 crores or more, then the secretarial audit will become applicable. Okay, so the company board of directors will appoint a secretarial auditor. He will do the audit of all the records, legal documents. All the legal documents he will audit. He will check the, for example, he will check the members register, share transfer registers, insider trading information if there is any. He will check into material contracts entered by the company, agreements which are entered by the company. Okay, various things. All legal aspects are being audited. Financial aspects by financial auditor, costing records by cost auditor. All legal documents, material contracts entered by the company, managerial contracts, all contracts entered by the company, the secretary will verify and will give the certificate. And it must be conducted as per the provisions of your Secretaries Act. Okay, that is appointment of secretaries 1. Here you can go through this, you will understand. That's what every listed company, 50 crores paid up capital, turnover more than 250 crores, then you have to go for appointing a secretarial audit. Through a board meeting, yes, the secretarial auditor is appointed, and to the board of directors, the secretarial audit will submit the report. So an MCQ can be tested based on this appointment of secretarial audit or auditor, and all those things that can be tested. We will see some of the MCQs that can be tested. Cost records are to be maintained by as per CRA 1. True or false? True or false? True. Cost auditor has to follow cost accounting standard in conducting cost audit. True. Cost audit is mandatory as per section 143. No, it is not as per section 143. Okay, it is as per the cost accounting record rules. Okay. CRA 2 is intimate to appoint cost auditor to the central government. Yes, it is filed to the central government. Chartered accountant is eligible to conduct secretarial audit. No. Chartered accountants can do only financial audit. They cannot do cost audit or what? Secretarial audit. It must be separately. Then, remember, chartered accountant of the company cannot become cost auditor or secretarial auditor for the same company. Okay. And for any other company also. Once you have a certificate of practice for chartered accountancy, then how can you practice cost accountancy or company secretary? Okay. Company secretaries are eligible to conduct cost audit. No. Okay. Only cost accountants. Okay. It's a silly questions. Okay. Secretarial audit is applicable to all unlisted companies. Is it true? No. Secretarial audit is applicable only when the specified capital exceeds 50 crores, turnover crosses 250 crores. Secretarial audit should be given in MR3. Yeah, true. Appointment of secretarial audit is done through resolution of board meeting. True. Secretarial audit report is attached to the board report. Yes, true. Secretarial report is submitted to the board of directors, or it is attached with the board report. Okay, let us see some fill in the blank questions. Secretarial audit is applicable to all DAS companies. It is mandatory for all listed companies. Cost audit is done by Cost according to is holding what? Certificate of practice, cost accountant. Then secretarial audit is done by company secretary. Cost auditor is recorded which are in form CRA1. Form of secretarial audit report is given in MR3. Secretarial audit is applicable for public companies having a paid up capital of 50 crores or more. Secretarial audit is applicable for a public company which is having a turnover of 250 crores or more. Secretarial audit is covered in which section? Section 204. Cost audit is covered under section 148 of Companies Act 2013. Cost auditor has to be appointed by Board of Directors as per the recommendation of Audit Committee. Appointed by Board of Directors. Cost auditor is appointed by whom? Board of Directors as per the recommendation of Audit Committee. So with this, the cost audit, of course, a small area of secretarial audit is getting over. Okay. Hope you understood the topic. If required, I request you to revise. The materials are there with you already. Okay, so I request you to revise the material, and I request you to repeat the video once again if required. Okay, so have a great day.